Tuesday, May 28th. Hope you enjoyed your 3-day weekend. This is Stan Ehrlich, Market Analysis. You guys know I start out with the indexes and go to futures and sometimes cycles, sectors, forex, crypto, variety of other things. But let's go to the indexes. This week should be a very important week. The reason is we have had a potential double top with major sell signals happening last week. We had one on May 22nd for the E-mini and May 23rd back to back, which does not happen very often. That does not guarantee that the market is topping out, but it sure is what I want to find and I've developed this trading strategy, ERSignals, ERSignals.com, as you can see, or info@ERSignals.com for more information. And I do tutoring as well. So the double top formation is just beginning. All we have to do is start to close below the low on May 23, and that would be a price of 52.73.5 for the June E-mini futures contract. That would cause me to be very optimistic about further decline, which would come down to at least 5,008, and we're currently 53.19.5, down on the day very, very slightly, about unchanged, but it looks like it could be beginning. Let's look at a short-term 5-minute chart on the E-mini. We see we're dropping fairly quickly at the moment, and we're close to or approaching the low of the day, which is another low of the day, which if we can get down below the low of yesterday, which I believe the E-mini was trading, yes, it was on the 27th, Monday. So Labor Day Mondays, low. We've got then another bearish engulfing on top of the two that we had just a few days ago at the top of the market so far. The killer day has been and still is May 23. Major new highs, clear cut. All of a sudden, everything fell apart and the market went down and closed below the lows of 1, 2, 3, 4, 5 previous trading days in a single day. That is a bearish engulfing. The bounce back up on Friday and for the E-mini yesterday, as well as today, is not a surprise, because frequently you do get a retracement back into the range of the reversal day, which again was the 23rd of May. Now I need to close below 52.73 in order to get the ball rolling faster. Next, down, of course. I don't know yet, by the way, whether this potential double top in most, or at least some of the indexes, is going to be the beginning of a move all the way into October lows. There's a chance of that. It's not the smallest formation. On the other hand, it's not that big either. We're only looking at a month and a fraction here or so, 2 at best, about. And here is the spider with the bearish engulfing in the top so far. Classic so far. Now the high in the last couple of weeks is higher than what it was in late March, but it's not that much. And it still could go down in the books as having been a double top formation if, of course, we start to go all the way back down to 493 and close below that low. That would drive the market easily to my long-term downside objective, which has been eluding me forever. And that's basically in the same price range that we were trading in December and January. for most of the indexes, except maybe the Russell. The 5-minute chart on the spider hasn't dropped off quite so much as yet, and it looks like it's just about to, of course. And there's a day trade scalp for ER1 a couple of days ago with our ER signal. Okay trade. Next, we have the QQQ, which also has a bearish engulfing at the top of the market so far. Now, it has been the strongest for the quickest, the fastest, the best, etc., on the way up, and went up above previous highs a couple of months earlier, the most of the others, but it's still got the overbought, it's still got the bearish engulfing, and it's still got those highs. Now, granted, there's some and a variety of support levels on the way down, maybe a bit more, and it won't come down quite as much as a result as the other indexes, but nevertheless, sell signal is a sell signal, and so far, all I need to do is start closing below those red bar lows. QQQ, 5-minute data, not really bending over, starting to slide down yet. No, not quite yet. Next, NASDAQ. We have another bearish engulfing on the NASDAQ. That's everybody so far. It's the daily data chart, and we have not yet gotten above, rallied above, traded above the high of the bearish engulfing ERSignal, which was on the 23rd. So I need it to drop off and start to keep going down here. We've got a 4-day week. Let's see how this pans out. 5-minute chart on the NASDAQ does have a little bit of a weakness starting to come in. But again, I need to have some of these yellow lines that have drawn in, which is short-term minor support, or another bearish engulfing could happen if those yellow lines for the last couple of days I drew in all the indexes, or most of them, is broken. More sell signals could develop. Okay, the Russell, different story. No sell signal, but in a major historical multi-2-year resistance area, topped out in overbought conditions again. So now all I'm doing is looking for a new low here, and simply I expect it to come down to, I don't know, 1950, or maybe a little lower. Couple 3 weeks. Next, Russell 5-minute, already below yesterday's lows. Did not get higher than the previous day's high, and I do not believe it was overbought within the last few days or so. So no, it cannot have a new sell signal, but still not good if you're starting to make new lows for a bunch of days. The Dow Jones sell signal smack on top, May 20th. A prelude was a sell signal that did not work on May 13th. Now, this high in the DIA was not a new high for the whole trend. It's the index that has been the weakest, the quickest, the fastest, the opposite of the QQQ. And that sell signal has worked outstandingly well so far. We have a new low and a new low close, quite likely, apparently, for, well, ever since pretty much the beginning of the month, May 6th. So we have a sell signal on the top of the Dow Jones on April 1st, April Fools. We have a buy signal on the bottom day on April 19th. We have a sell signal on the top May 20th. 3 for 3 lately. End of story. Here's the rally high that created the sell signal on the 20th of May. And here we are making new lows quite easily and substantially, well, a while back, a few hours ago. Let's take a look at bonds. Bond market is now back into its channel, downward slanting channel, which I have said many times, a downward slanting pattern in general. You can rule out head and shoulders in that example, but wedges and pennants and triangles and stuff, they are usually a bullish formation in the end and break out to the upside. Now, bonds tried to break out on the 16th and fairly successfully, but only for a day, and dropped right back into the channel the next day. And we now have been back in the channel since. Plus, we've got a sell signal, official ER sell signal on May 23rd, right in line with the other stock market indexes. This is shaping up to be pretty decent signal so far, and it could be a lot better. I'm expecting the bond market to come easily down to 115.07 into 114.06 or 7, that approximate 1 point range. And I'm not ruling out by any means a move down to 112.30 or a little below 13. And we're 16.03 at the moment. But it could even drop off to the bottom of the channel in, let's call it 2 or 3 weeks, which would be 110. That's not being ruled out either, which might create a broad double bottom since last October lows. That's not out of the question. 10-year notes. Well, first of all, the bonds, scalping profit on the 23rd with the bearish engulfing. Took it a day, 2.5 to start to make new lows. Today's last couple of hours is now new lows. 10-year notes stayed above its channel for a few days, several days, but now is back inside like the bonds. I did not get a sell signal. We only got overbought on the high day of May 16th at a significant resistance area, almost exactly, and it turned down. We are today making new lows for approximately 3 weeks. And that is good. That's just what I wanted. And all the other comments I made about bonds apply to the notes. And the double bottom might even be a little closer at hand because it's not as far away, not as far above its last October lows. We're looking at the crude oil and then heat unleaded. So strong. Looks like it's about to make new highs. Buy signal on May 8th. Didn't work exactly the way I'd like. Small profit for the trade for a couple of days. Came down and barely made lower lows. It did it again. But that area has developed into a very nice support level at 78.25, give or take, 76.25, give or take. And we are about to, it would appear, make new highs for about 3 weeks above 80, looks like 80.10 or so. And we're 79.73 right now. So it could happen very quickly. If that's true, we've got a little bit of a triple bottom, which produces a minimum upside objective. And I'll do this for you real quick. The average low is right about there. And I'm going to move that little line up to the top of the rally high. That measures the depth of the formation. And from the highest high, you go and measure upwards. My minimum upside objective, 84.10, give or take a few. Right back up to around the tops we saw in April. Next, natural gas. Got overbought, has had a correction. Looks like it could be starting to move its way back up. It came down to a minor support level. Excuse me. I'll also draw that line in for you. And right about there. So bounced off of it the last couple of days, Friday and today, so far. And if we start to see minor new highs for a day or two, it's only 3 days ago that we had the highest high. It's been a fairly sharp break, and now we're back to neutral RSI. I think it's going to make new highs. Next, heating oil. There is, and I've outlined, a minor, and it's improving, very small head and shoulder bottom forming. Let's zoom in on that a little bit. It came down to a support level and had its lowest low. 1, 2, 3, 4, 5, 6 days earlier, we had a bullish engulfing, and 5 days before the lowest low, we had a bullish engulfing. It didn't work that well, went up only for a day or so. Down to the head, up a little, and then after the head, 1, 2, 3, 4, 5, 6. Okay, 7 days later, with the symmetry being ruined just a little tiny bit. But the formation is still there. The neckline is still there. The support level is still there. Everything looks good the way it's developing, with it being very strong today. New highs for the previous 2 days, 3 days, excuse me, 4 days actually, and very quickly approaching the neckline. The minimum upside objective on this is at 2.6459. I don't mean to be too exact, It's just simply that's where the line ends, and the line is the depth of the formation. But that's meant to be an approximate, pretty accurate, I hope, upside objective that is a minimum again. Looking for pretty good strength here. Let's see how this breaks out probably this week. Remember, when it crosses the neckline, it should stay above it, and it should be a very strong up day, high volume, very classic, it's obvious, breakout situation. Next chart. Gold. Well, we have a double top formation, overbought conditions in both cases, dropped off very sharply last week, came down fairly close to a minimum downside level for the breakout of 2285. It needs to close below that in order to go down to its minimum objective of 2123. And a bounce here of a couple of days worth of activity, and it's a fairly mild bounce after a couple of really big down days. Doesn't really change anything so far. So obviously I'm looking for a low lower than 2324 very soon this week. And that should lead to a new low and a downside breakout in gold. Silver, not the same story at all. Rushed up and to and through the previous rally high on May 20th, 17th. Very overbought conditions for a couple of days. Finally topped out. Today we're coming up again, relatively close to the previous rally highs completely. After a move back down to that minor support level, the old high. So this is actually acting pretty bullish. It will change completely if we start to go below 3025. That would be a very minor downside breakout on a very minor toppy formation, but support would not be holding anymore. And we'll see how it then acts when it gets down to 29.34 and maybe 27.75, et cetera, et cetera. So there's a chance of stopping out, but it's not very obvious. Platinum, the high of the market, bearish engulfing ER sell signal to the exact day. We now have a rally back up into the range of that resistance, that reversal day, which was on May 20th. Seems like around that date, a lot of bearish stuff happened. And that's not to be ignored. So we hit a low at a little support late last week, popped back up a little bit. I'm looking for this to turn around and head into new low ground, and may very well come back down to 975 and maybe even all the way down to 890-ish. Next, high-grade copper. Well, let's see now. This market unbelievably topped out in overbought condition just several days ago at almost the exact same high that it topped out on March of 22, over 2 years ago, and had a very fast, sharp break ever since it reached that historical resistance level. And it's now reached a minor low at very minor support. Unfortunately, I didn't get a sell signal on the top of the copper market here. So I'm looking for new lows below 4.7405. And if that happens, we're going to probably break down to at least 4.4640. And I'm not ruling out at all 41. That is 4.1290. So I'm trying to justify a more significant, important top here in copper if it can fiddle around for a couple more days to the right this week and maybe start to go down quickly early next week. Beans, oil, meal, corn, and wheat, you guys know by now. I picked 4 out of 5 of the bottoms in the grains, and beans is one of them. Wow. But it looks like, ladies and gentlemen, we may have a minor top in grains starting last week. Let me say why. The rally in beans got up to previous highs, 1258 approximately. Now we have lower lows for the previous 4 or 5 days and a bearish engulfing today. Implication, it's going to come down to about 1203. It may even test the support area again, 1191. That wouldn't surprise me at the moment because of the bearish engulfing and a little bit of a double top for about a 2-week period of time. I still like the fact that we did get that bottom to the exact day, and it was a broad double bottom, and it's worked great. Now, the support area, which used to be the high of the double bottom, basically is where we are now. And so it's not really kind of holding very well. So I think it's going to slip off a little bit more short term in beans, not necessarily changing the longer term bullish story. Oil, 44, 45, 65 at the moment. Last shoulder low on a very large 2-year, maybe head and shoulder bottom. Two things I don't like about it, I've been saying for a long time. I don't like the fact that it's 2 years in forming. They're not that big usually. They're usually a few months to 6 months, small to medium, 6 months to a year or so, medium to large. Over a year occasionally, but a 2-year formation is fairly rare. Plus the fact that it's happening at the end of a big sideways trading range, and that doesn't form head and shoulder tops and bottoms, usually form at a top or a bottom of a long-term move. This is after sideways. Otherwise, the chart formation, the neckline, and all the other body parts look pretty good. So I've got to think it's a head and shoulder, just a rare form. What about soybean meal? Well, we have a bearish engulfing signal in soybean meal with a minor double top, just like soybeans, forming today. Beans don't have the bearish engulfing. The reason meal did is because it just barely got above 75 on the rally high today, creating my bearish engulfing ER red sell signal. Now for the double top, we need to close below 365. And if that's going to happen, we're going to have a minor downside objective about to, and here we go, about, I would say right smack in the support area, 340. We did buy the bottom of the market, ER buy signal, automated trading system, February 29th, the low day. So I'm liking what I'm seeing, except for minor bearish formation, stymieing the intermediate trend a bit, but not necessarily changing the longer term bullish story. So let's see how far down this might go and whether it can recover completely and start to make new highs, which would be very bullish long term. Corn, no sell signal, but it looks like we've got a bearish engulfing. We don't have a sell signal because it didn't get also overbought. We did test a little bit of support a couple of weeks ago, and it stalled out. So corn is kind of failing to make those new highs. And of course, that's a modestly short-term bearish-looking situation. Nothing major. I've still got to point out we got a buy signal smack dab at February 26th on the bottom of the corn market to the exact day months ago. And just recently, we had its highest high. So it's time for a bit of a correction, which might last a few weeks. We got the bottom with 2 buy signals on wheat, and that was on March 8th and 11th. Just recently, we got a sell signal, which didn't work very well. It dropped off only for a couple of days. That means you could have, would have, should have made a little bit of money, but nothing spectacular like our buys at major bottoms. Now, I'm overbought again. If we get below yesterday's low, and we're not particularly close, and we're up net on the day slightly, then we'd have a sell signal. So that's, a danger. My consideration would be to potentially, if you choose to, put a sell stop below yesterday's low, 1 tick below yesterday's low to catch the bearish reversal if it does happen. Otherwise, close, it's a day order, and the potentials for the signal would be gone if it doesn't happen today. It might happen again tomorrow a little differently. But look at this. Cattle overbought in a resistance area, struggling to follow through to the upside, and not far from other major highs, say in early March, and a lot of historical resistance in general at the price levels we just got back up to in overbought conditions recently. So is this topping out? I don't have anything today so far. This is a doji. It's an inside trading range day. The high is lower than yesterday's high, and today's low is higher than yesterday's low. So it's going no place. It's up a little bit at the moment, neutral. And hogs. We got the top of the Miss Piggy market to the exact day, April 10th, on a head and shoulder top, which it developed after the bearish signal. The neckline got broken. I've been talking about this formation since about, I don't know, April 29th, maybe April 26th, and even I could have started talking about it April 24th. That would have been about right. And even maybe a day or two earlier than that, I don't remember. So the bullish engulfing, I said, was not in the right place, not looking very good. I can't refuse the automated trade, which did make some money on the scalp version. The overnight, probably not. The new low for the move has happened. It's getting closer and closer to my minimum downside objective I've been talking about for weeks of 94.40. I fully expect that to happen, but we are now down to 15 on the RSI. So probably a little bit of a rally first and then new lows to the downside objective. And we're going to go grab TradeStation again for those ICE New York market charts. And that would be OJ. Honest to God, it just won't quit. I don't know what to say here, except the same thing I've been saying for a week or three. Dangerous to be a buyer. Screaming higher like this very often results in a huge down day very quickly, taking many people by surprise and either destroying profits or late buyers here, destroying your account. I'll go over to cocoa, blow it up. Well, no, let's go down first to sugar, full screen. And so far, this is the second test of the neckline of this unusual, but still good, large head and shoulder top, basically developing April, May, and June of 23. Then the head started in September through about November 22nd of 23. And the last shoulder was from about February early to the 1st of April of this year, 24. So slightly upward sloping shoulder, slightly downward slanting shoulder, symmetrical. Top about the same time frame, left to right, a little bit larger. Neckline, okay, no problem with a slightly downward neckline. And when it was broken, it rallied to the neckline and then made new lows. Classic. But we had a buy signal a few days ago. So far, that really hasn't worked, period. And I don't want it to rally above today's high. I don't want it to close above the neckline. It would begin to ruin this pattern. So far, this could be a rather idealistic spot with very low risk to get short. Not an official recommendation. I used to have a license for 30, 40 years, hedge fund manager, the whole routine, but that's my comment, personal comment. Explanation point. Next, cocoa, minor bottom, rallying a bit, was oversold, a buy signal developing part of the bottoming out process, not the lowest low, unfortunately. I think we could rally a little bit more. We're not overbought. That's about the best I can say in cocoa. Next is the OJ. We already talked about it. And cotton, buy signal again as part of the bottom so far. And now we're well above the green bullish engulfing on May 3rd, but it worked only for a few days, but it worked a little bit. Then we had the lower low with no downside follow through, and that turned everything around substantially. And a divergence bottom, new lows in price, but no new lows in the indicator, in this case, my custom RSI. And again, I learned RSI from Wells Wilder himself in the 70s and 80s. and stochastics from George Lane, blah, 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 and John Bollinger Bands, and so on and so forth. Part of the lecture circuit for 150 conferences worldwide. I just did the San Francisco Money Show about 2 weeks or so ago. Next chart is gold, and we've seen these markets. Thank you very much. You have a great trading day. Money management is so important.